Welcome back for another Q&T price prediction analysis video, and in this video I will be giving you areas that Q&T needs to continue holding within in the next coming hours, areas of resistances that you also need to see a break above, and also share out my long-term Elliot wave analysis that I'm expecting to play out once the bull market is here. And at the time of this recording, Q&T is holding below the 20-day MA here on the 4-hour chart, which is now acting as resistance for us to continue gearing up. And the next key area of resistance that we need to keep our eyes on lies at around the $105 mark, and a break above that key area of resistance with a successful retest, then we can easily see Q&T get above the $110 mark. We are also holding above a significant area of support at around the $100 mark, which is acting as support for us to continue expecting higher prices. And if by any chance we lose this key area of support, then the next areas of supports that we need to keep our eyes on lies at around the $97 and the $90 mark. Q&T has also continued to obey the Elliot wave structures, and zooming out to first give you my short-term Elliot wave analysis that I believe is playing out on the Q&T chart, you can see that after getting our lows at around the $84.5 mark, we saw that massive breakout to the upper side, breaking above resistances, giving us a high above the $110 mark, completing the formation of these wave 1 to the upper side. And after seeing the formation of this first wave, we started a corrective structure in the formation of this wave 2, whose minimum target areas I have highlighted on the charts using this blue target area, which is an area that I came up with by connecting the Fibonacci's from the low of the first wave to the high of that wave 1, giving me a minimum pullback target area between the Fib level 0.382 and the Fib level 0.618, and that is between the $100 mark and the $93.9 mark, which is an area that we almost fully maximized and started this move to the upper side in what I was terming as the start of an impulsive wave in the formation of this wave 3. I even gave you minimum target areas above the $137 mark. But at the time of this recording, I now have issues with this third wave to the upper side, since we are losing the impulsive nature that we need to see in the formation of that wave 3. And for us to regain our impulsiveness to the upper side, we need to see a break above significant areas of resistances and possibly get above the $110 mark once more. But in case that doesn't play out in the next coming hours and also days, and we continue heading further down, and maybe at some point we lose the $100 mark, then I will be expecting lower prices back into this blue target area, fully maximize the target area, get another low in place for the second wave before we can see another reaction to the upper side in what could be the start of an impulsive wave in the formation of that wave 3. So there are high chances that in case further pullback continues, we are going to get back into this blue target area between the $100 mark and the $93.9 mark, get one more low before we can see another reaction to the upper side. And the worst case scenario can only play out in case we see a pullback into the area, and maybe at some point we break out of the area to the lower side, and maybe also lose the $90 mark, which is our next key area of support in case we see another pullback. And that will be suggesting that there are chances that we can see a reset of the lows that we made at around the $84.5 mark. So that is something that we need to have in mind and also be prepared in case further pullback continues. Jumping to the daily chart to now give you my long-term Elliot wave analysis that I'm expecting to play out once the bull market is here. You can see that on the daily chart back in 2020, Q&T gave us these lows down here at around the $100 mark before we saw that impulsive move taking us to all-time highs above the $429 mark, which was a perfect 4x to the upper side. And after seeing the all-time high, we started a bear market where we had been seeing lower prices in this ABC corrective move, giving us a bear market low at around the $40.1 mark. And after getting the bear market low, we continued to obey the Elliot wave structures, where you can see that we peaked in this 5-wave structure over here, having the wave 5 giving us a high above the $229 mark, completing the formation of this Elliot wave count 1. And after seeing the formation of that first wave, we started another corrective structure in the formation of this wave 2, in a move that gave us a pullback into the minimum target area highlighted on the charts using this red target area, giving us a low at around the $84.5 mark. And there are high chances that we now have a bear market that is a low in the formation of that wave 2, and QNT is ready for a massive pump in the formation of this wave 3. And the minimum target areas for the third wave can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area at the fib level 1.618, and that is above the $381.4 mark, which is the minimum that we can expect QNT to do in the formation of that wave 3. So that is what I'm keeping my eyes on the short term and also on the long term. And I hope that video was of much help to you, and I hope to catch you in the next one.